morning, everyone. Here we go. Well, thank you for having us back. A couple of years ago, I think not last year, the year before, we were here and we spoke briefly about research we had done globally, and the theme at the time was renewing the promise. Basically, we were right at the tail end of an extreme crisis, and trust had to be restored. We've moved on. We're 2 years down the road, and now we're really looking at growth is back on the agenda. It's almost back to business as usual, but business as usual is now a much more competitive environment. What we'd like to talk to you today about is a competitive theme that we've been discussing with our clients globally. We've had discussions with asset management CEOs, COOs, and CFOs regarding the competitive fabric of their organization. So our discussion today is going to be a little bit different to maybe other themes that we've been talking about, the investment perspective, and we're really going to look at the essence of competitiveness in the asset management space, and what the leadership has been telling us they feel will drive the winning entities in the future, and how we've interpreted that information. So, and what we're talking about is essentially, and that's why we named this discussion the agile asset management. It's really all about agility. In the new or the post-crisis environment, we feel that agility really is an overarching theme that will separate the long-term winners from the ones that fall behind the way. I'd just like to level set what we mean by agility. And for us, it's really about speed, reactivity, proactivity, nimbleness, flexibility, inventiveness. To us, those are characteristics that really will drive competitive success over the future. What we've been hearing from the different leadership discussions that we've had is that, you know, agile is really what's going to drive true growth. Agility really embedded at the core of the operating model. Something we're going to discuss a little bit more further down the road, is what we see is how to build agility and then how to embed it in the operating models, and how to use the operating model to do so, and then how to deploy it, which is also an interesting part of the discussion. The element of people, but also how you take the people element, and given a situation as Joaquin was describing to us, we're almost at full employment. At full employment, I'm sure all of you feel the pain that it is to attract talent these days. So agility is at the heart of helping to attract talent, but once you do attract the talent, the question is, how do we take that talent and then align it to corporate culture, and then help also embed the new elements that this talent brings in, and how that has to actually be wired into the organizational structure. And essentially, it's really about delivering strategy. I mean, to be very honest, I'm a little cynical about strategy. I think strategy isn't that hard to set. It is, however, extremely hard to execute. That's what my experience in 20 years of consulting in the industry has told us. So, you know, this is really how we'd like to frame our brief discussion with you today. It's around agility, how to build it, how to define it, how to build it, and how to deploy it in your organizations. Two sides of our point of view. Yes, on one side, it's really about reacting, and I mean, I think we all know how important it is to be able to react, given the speed with which changes have happened over the last few years. Having said that, we also feel that it's much more than that. I think we feel that again, separating long-term winners from those who are left behind is about proactivity. It's actually shaping that future. But we really have to be able to move at that speed in order to stay ahead of the curve. And that's really what it's about. It's about staying ahead of the curve. So what are key findings in the discussion? Well, we spoke to 26 CEOs, 5 CFOs, and 6 COOs globally. And that was the essence of the research basis we did. And we extracted from those the competitive themes that are concerning and on the agenda of these executives. Our findings are that one is, fundamentally they all agree that agility in one form or another, and we'll break that down a little bit later, but agility is what is going to separate, as we've said before, the ones who outmaneuver, the key element to outmaneuver and outperform competition. The second element is that what's driving the need for agility, yes, is the ability to build operating models that have that kind of responsiveness and drive responsiveness, but it also is driven by the market. What I mean by that, and we'll see that also a little bit further down the line, is you really realize value of agility by leveraging new business opportunities. So it's very good to be operationally fit, but if you can't leverage that fitness in terms of financial and strategic objectives, well then you don't really feel the benefit isn't as tangible as we would like. Agility is key in order to remain relevant as we dispose, decommission, launch new products within the portfolio. That's really how we keep relevant to the market. That's how they see themselves as asset managers and wealth managers really remaining relevant to the customer base. And really that's the key of how they're using and how they see they're going to use agility. We've spoken about the importance of making sure that it's used to drive the thing. There's no one way to build it or to deploy it or to leverage it. It's really very true to each one's positioning, culture, and overall competitive stance. So what that means is that over time, agility is going to have to be less a result of ad hoc management, but be taken much more as a structured approach to actually building it and leveraging it. An interesting point, it can be stored. Actually, it's critical that it is stored. No organization can run at flat-out speeds on a full-time basis. It's almost like running a car at full revs. You will burn out. But the question is, when you need that power, when you need that speed, how easy is it to access? How easy is it to launch? How easy can we bring to bear the benefits of actually being nimble and fast and quick? Another interesting point, although agility is considered to be absolutely vital for the competitive environment, hyper-agility is considered to be extremely negative because it does have destructive possibilities for the organization. And lastly, and rather obviously, leadership is really what drives this. And I use the word drives it because that's not the end all. Obviously, it has to start at that point, but then it has to percolate down. And again, it starts as a people play, but then over time, through processes, through structures, through policies, it begins to embed in the competitive model. So this is what we've been hearing from the set of executives we spoke about. I remind you that this is a global discussion, so we're not talking about Brazil. So as we move into a framing of the context of why agility is relevant and why it's critical, we do have to remember that we're looking at a global scenario. So issues such as volatility or the gloominess that, again, Joaquin referred to globally, in Brazil, not necessarily applicable, but I do see the world of opportunities that face us as a country as also a challenge to be responded by and with agility, given that although having grown over the years, the profile is changing. We do have a new type of investor coming to the market. Not only is he a Brazilian who may have joined higher wealth ranks, but he is also an international investor that in the past did not consider us as a destination, and now we are increasingly so. And also how Brazilian players start looking more globally as well, as we become less of an insular capital pool and begin to really reconnect into the global flows again. So on the one hand, yes, there is ongoing market volatility. Yes, there is the erosion of client trust. Again, not so much the case in Brazil, but certainly globally, and that is what our clients are telling us is still very much on the agenda. Regulatory change, this is a big concern. In Brazil, a little more restricted to the more newer product lines, the FIDICs, which we know are being looked at, and possibly the real estate funds. But globally, there is a big concern as to the regulatory impact that what's coming down the line. We're also concerned that a lot of the asset managers are going to be tied to dealing with that and may not leave enough attention to really positioning for future competitiveness. And very much a competitive increase in the industry and consolidation. Maybe Brazil is a little further down the curve from that, but consolidation is something we are looking at globally. Subscale organizations will have a difficulty to compete in margins and may become easy targets. Having said that, we have also looked at the numbers for Brazil, and we will see growth of products such as ETFs, which change the economics of our traditional products. So we do also see, even in a very positive light, and positive good markets do attract competition. That's one of the characteristics that they will show you. We do see that in the light. Having framed the challenges, on the other side, there are new wealth pools to be attracted, not only locally in Brazil but internationally as well. Cross-selling to existing clients as we move only from a product perspective to more solutions in terms of asset management solution sets. That's certainly an opportunity down the road as well. Diversification and thus diversifying the product offering is interesting as well. And we see an aging population. An aging population, in our view, is a massive opportunity, given that this will drive additional savings needs. So this is the environment in which we feel that agility really becomes a sort of a linchpin to again separate winners from losers. This is how we frame the overall discussion. And again, it seems to resonate very clearly from the CEO level that yes, we are looking at agility. What we need to do now is understand what they consider agility is and how that is going to be operationally actually managed. So what are the trends that we see that are actually driving this? Well, globally speaking, we actually think that a lot of the bank-owned asset managers are going to be sold in order to fund the liquidity needs from the banking side. From the largest international asset managers, we think they're going to get even larger through acquisitions. So post-merger acquisition is certainly very much the key issue on the agenda. An interesting point. We see a return to a wave of outsourcing. Outsourcing in the past has been seen as a response to again drive agility and even cost reduction. However, we haven't seen that really pan out as expected. But it's a solution that rather than being tested and being left to the side, I think we see another wave coming, and this time with a very acute intent of making it work. And in the insurance side, I mean, they have the insurance asset managers have a slightly different cost-income ratio structure. They're a little less cost-effective, so they really have to drive the agility, and they're looking at ways to manage that. So that's a lot of what we see. Really, agility can come and help provide a response for. So again, if we were to take that information and break it down into three sort of macro elements of agility that really provide the benefits before we move into more detail, is one, it will give you greater control and tactical, strategic and tactical control of strategy execution. Again, strategy design to me is significantly less of a challenge than executing it. It also means that you can commit to a strategy rather than becoming slave to one whereby you bet the farm on one line of it or one approach, and as that approach proves to be or to require adjustments, we find difficulty in responding to them. So agility really provides the responsiveness and even the outlook to anticipate needs changes and adjustments to the strategic direction and allow you to execute them before they become a real pitfall which will drag you down and eat capital and time from management. Obviously, at the core of agility, to provide that, we're really looking at the operating model as the essence of where it's built and kept, not necessarily where it's deployed, but certainly operational efficiency and cost flexibility is really a central element to agility. And ultimately, what these two macro elements will produce is the ability to do what really matters, which is maintain yourselves relevant and valuable to your clients, and thus realize those earnings. That's really what we're looking at. And you know, I put in a quote there from one of the CEOs we spoke to, because I find very interesting. I think while the future is uncertain, and that's sort of very obvious to us, the range of potential outcomes has probably never been as great. So we can really look at, you know, absolute success to literally falling by the wayside. And that range and your positioning, the positioning of a determined asset manager in that range will be determined, in our view, as to how well he harnesses or he harnesses and then uses the ability to be agile and to execute on that agility. So really that's the essence of what we've been speaking about. This is an interesting slide, very simple, but we went out and we asked them the question. So how do you feel the industry is doing in terms of agility right now? And what they tell us is, look, we've been through massive asset devaluation. We've been through 2 cycles of shocks. We're learning to be leaner. We're learning to be meaner. We feel we're fairly agile. We consider it more or less a score of 5 out of 10, which is not fantastic, but it's also no disaster. Interesting. So we then asked them, how do you see yourselves in that scale? And then the response on average was, well, we're doing better than the market. I find that interesting. I actually think that there is a little bit of a bias in the way that we're assessing ourselves, but that is the response we got. So the majority of the responders and the leadership that we spoke to actually told us that they see themselves as being slightly better than the market on average. But then we moved to the following question. It says, okay, are you where you need to be? Do you think that you've done enough? And again, interestingly, the response was no. We think we would have to be operating at around a score of 8 out of 10 to really believe ourselves as clear winners. So there is a level of uncertainty, and that's probably driving a lot of the investment that we will see down the road. Having said that, nobody really said to us, we need to be a 10 out of 10. And that reverts back to the comment that I made earlier about hyper-agility. And what are the fears there? The fears is that if you're too fast, if you're too nimble, if the structure is too fluid and too liquid, essentially we can lose control. The costs of achieving that level of agility may be also prohibitive. Because, I mean, you know, it's an easy word to say, but we are talking about flow of information, quality of information, how it's captured, how it's treated, how well it's put in front of the decision makers. And, you know, my work every day tells me that we're significantly far away from that position. So there is a concern, and there is a thought of, yes, we need to improve our overall agility, but not to the point where it'll be more than what we actually can pay for. And there's also a belief that continuously operating at that kind of speed will produce burnout throughout the organization. We agree with that. So, you know, it's a simple slide, 3 basic numbers, but it tells a story, and it's a story that we actually agree with. We feel that yes, the asset management industry as a whole is a nimble. It's almost, in my view, but this is my personal view. It's also a characteristic of the industry. We're not a capital intensive asset, capital goods driven industry. We're a thinking industry with a lot of knowledge and deploying capital, which can be done fairly quickly. Having said that, there is a lot of room to improve in our own view, in our own leadership's view. I actually believe the gap may be a little larger. I don't think as a whole, and given what we've seen, that you know, it's such a comfortable situation that we are above in most cases what the market is doing. But yes, there is a lot of room to improve. Now, so we've spoken about what it is, why it's important, in what kind of a competitive environment it will be relevant to us as leaders of businesses that have to deliver value to our shareholders. So now it's time to move on to a little bit more of an operational review and actually breaking it down. What are we talking about? What is agility? How? And in what spaces do we feel? Obviously, at the core of this is leadership. If leadership does not embrace and truly live by this value, it's not going to happen. But once that's done, you really have to make people embrace it. So it's almost an example-driven move from the core to the outer wave. But then how the challenges of taking that from people and embedding it into the culture. Culture outlives people. People will come and go, but if they come in and they actually buy into culture, that's how you will prolong the outlook for building that culture. Practically speaking, once we move away from the softer elements of agility and we have the mindset in place, we really have to produce and provide the structural elements. So obviously, what are our core business processes? They are not the same. The fundamental basic management processes are the same, but our core processes, the ones that and the ones that drive differentiation, are not the same. Do we know what they are? Do we know how to qualify them? Do we know how to drive improvement in them? Those are the key questions in terms of the core business processes. The operating infrastructure and the technology. And then I go back to a very simple piece to me. Technology is great, but to me it's all about information, really. And how quickly it moves and how good it gets. And how well you actually put it in the place that it has to be placed in order to drive quality decision making, which is really what it's all about, in my view. So how good is that right now? Again, we know that there is a major gap here. We also do know that it's an increasing focus from asset managers that are increasingly looking at business intelligence systems to really help solve that structural point. Governance and risk controls. This is for obvious reasons, a critical piece. And this is what maybe we can see as a protective element of the agility discussion. So this is where we are going to be able to gauge how far we carry on going and how and where to stop. What's our ideal level? And this is really going to come through the controls. If the controls allow us, we can speed up. If we start hitting the controls, we know that we're hitting that, we could say, 8 out of 10 score level. And there's the classic phrase of what you don't measure, you don't control. And again, it's about how well we know what we need to look at, what the decisions that we need to take require in terms of information at our fingertips, and how we've managed that, and how we link that to the incentive structure. I mean, the incentive structure has been at the heart of a lot of the discussions post-financial crisis. We're still having them. But we also know that they are the most effective way to drive corporate change and really align strategic goals with operating challenges. So we've moved out from the softer side into a more structural discussion of agility. But what really matters is that it has to produce results at the product level, at the market level, and at the client level. So if we were to simplify the discussion here, to me it's really about how we've taken our target operating model, our operating model, we've looked at it, we've aligned it with our strategic goals, and we've made it flexible enough, and we've built in it not constant speed, but the ability to pull speed when required. So that once it's clear that we need to react quicker than typically, and when it's almost like, some of you may be Formula One fans, it's almost like the KERS system in the Formula One cars. So you store energy and you deploy it at a key point when a key competitive discussion arises, or a key responsive challenge arises, and you have to act quicker than most. And that's really when the agility investment pays off. And really, at the end of the day, that investment, that performance will only be driven once we realize the financial and strategic objectives that it's built to produce. Which means that, again, we must be careful not to go into discussion of building agility for agility's sake, but aligning the ability to have the agility with where we need to get and what our competitive challenges are. So, I think we've just gone over the elements that we understand are the key structural pillars of what constitutes and what builds agility in an organization. So, people and culture, core business processes, operating infrastructure and technology, organizational structure, governance, and risk controls, and measures and incentives. Those 5 elements to us are really what frame and shape agility. And again, it's only really valid once we reach market, product, and client relevant points. So we can take that and we can cross-reference to the top 10 elements that we've identified are on the CEO agenda. So as we spoke to those executives, what came out of this is increasing margins. So some of them I think are fairly common, but my comment is between increasing margins, restoring trust, managing the cost base, diversifying the product set, expanding internationally. And this is interesting for Brazil in particular because we know that competitiveness will increase in Brazil merely because we have become more attractive. Which means that, again, our more insular market, that has been the case for many years, we will start seeing, and certainly we as a firm, we've felt that movement very strongly, which with new market entrants, who want to establish themselves before the market, and want to create that brand recognition before the market becomes overcrowded. but that is coming. That is coming. So certainly very true in our case. Attracting and retaining talent. I think in Brazil it's a massive challenge right now. Certainly is in our case. Coping with regulation, increasing third-party assets for the insurers, making outsourcing work, and integrating our acquisitions. Those are our top 10 challenges. The point here is, can we attack all 10? Or do we have to be intelligent in order to align our agility capabilities with the top 3, the top 4, the top 5? The message here is choices will have to be made. And again, we have to have the agility of the information to understand how these priorities shift over time, how well we've dealt with one and they move off our agenda, and frame the discussion for the next challenge, or the next set of challenges. They probably never come on their own. So, that very interesting point of view in that sense, where we will be forced to make changes. Agility can help us identify and hone in on the ones that will provide the best returns for our buck. Interestingly, agility does not have to be an ongoing state, as I've said. So there is a relevant comment as to how agility is deployed. Just like I said before, we really use the metaphor of the Kerr's braking system, or a latent source of energy that can be tapped into when needed. It really shouldn't be there all the time. It probably costs too much money to have it there all the time. But it can be done, it can be built, it can be stored almost at zero cost. And it should be able to be tapped into very quickly once our information systems and leadership understand that those challenges have to be met. So, in conclusion, we think agility is at the core of what to us is one of the biggest challenges in the market today, which is executing on strategy while not becoming absolutely tied to a strategy to the point where if it goes wrong, you know you're going to go down with it. You will have the ability to react and shape things as things go by. We also understand that agility will not happen by ad hoc management styles. It has to be embraced and treated in a more structured way. So taking that on as a clear corporate goal, having that goal drive changes and adjustments made to the operating models is absolutely critical and pivotal, really. And at the end of the day, what that will do is basically provide the ability to execute the strategy and create the culture. That's really it from us. You know, agility is really at the core of what we think can differentiate the real winners down the road. That certainly seems to be the case of what we've been hearing from all our discussions with leadership. Essentially, we're almost 4,000 professionals exclusively focused at the investment management industry globally within KPMG, and essentially what we brought to you today is a very sort of almost an extreme extract of what we've been hearing and how we interpret the challenges from this at the C-level suites. And we really do believe that agility as a theme, as a competitive driver to go from a strategy to operating model to people and culture, really can provide the punch that we believe will be necessary given increased competitiveness in any market for different reasons. In Brazil, it is because we have a rosy future, and that means that more people will be coming to try and go after our clients. That's it from us.
Okay, big round of applause for Oliver. Thank you very much.
Thank you, thank you.